Ladies and gentlemen, welcome to today's market update. Small traders across Iraq are raising alarms about potential shortages of goods as the cost of the US dollar continues to rise in both official and parallel markets. While the Iraqi dinar has remained relatively stable officially, pressures in regional markets, especially in northern cities, are making it more expensive for traders to secure the dollars they need for imports and daily operations. In recent days, the dollar has seen moderate increases in Erbil and other northern markets, reaching levels slightly above Baghdad's official rate of 1,310 IQD per USD. For small importers, even slight increases can translate into higher costs for purchasing goods from Turkey, Iran, and other regional suppliers. Many traders report that these rising costs are already forcing them to adjust prices for essential items such as food, fuel, construction materials, and electronics. The problem stems primarily from limited access to official dollar allocations from banks. While larger businesses can sometimes secure dollars through established banking channels, smaller traders often rely on parallel market purchases, where rates are higher and fluctuate more frequently. As a result, these traders face higher overhead costs, which are inevitably passed on to consumers in the form of higher prices or reduced availability of goods. Analysts warn that if these trends continue, Iraq could experience localized shortages, particularly in northern cities like Erbil, Sulaymaniyah, and Dohuk. Importers may reduce shipments, retailers may limit inventory, and everyday citizens may notice increased difficulty in finding essential products at reasonable prices. This scenario underscores the importance of monitoring both official exchange rates and regional market conditions. Despite these pressures, experts emphasize that this is not indicative of a central bank-led revaluation. The Central Bank of Iraq continues to maintain stability through measures such as controlling cash circulation, promoting digital payments, and regulating dollar flows to prevent smuggling and excessive black market activity. The rising costs in the parallel market are primarily a reflection of supply-demand dynamics, regional trade pressures, and logistical constraints rather than official policy changes. For traders and small business owners, the message is clear. Careful planning is essential. Monitoring daily exchange rates, adjusting pricing strategies, and maintaining strong relationships with suppliers can help mitigate the impact of rising dollar costs. At the same time, consumers should remain aware that localized price increases or temporary shortages may occur in areas where dollar access is limited. Historically, Iraq has seen similar patterns during periods of increased demand or dollar scarcity. Regional variations between Baghdad and northern cities often create short-term pressures on smaller traders, who are more vulnerable to fluctuations than large corporations. Over time, these variations tend to stabilize once allocations normalize or demand shifts, but they serve as a reminder of the complex interplay between currency markets, trade, and daily life. In conclusion, the rising cost of the US dollar is placing real pressure on Iraq's small traders, potentially leading to shortages and higher prices for consumers. While the official dinar remains stable, parallel market pressures and regional disparities are creating tangible challenges. Traders, businesses, and citizens alike are advised to stay informed, adjust to market conditions, and plan carefully to navigate these fluctuations. Ladies and gentlemen, the Iraqi dinar continues to hold steady officially, but regional pressures are making the dollar more expensive for small traders. Awareness, adaptability, and strategic planning are essential to ensure that businesses can continue operating smoothly and citizens can access essential goods without disruption. We discussed how rising US dollar costs are impacting small traders across Iraq, potentially leading to shortages and higher prices for essential goods. In this segment, we delve deeper into the economic dynamics, regional disparities, and practical consequences for businesses and consumers. Across Iraq, small traders are feeling the pressure more acutely than larger corporations. Banks allocate limited US dollars primarily to major importers and established businesses, leaving smaller traders to rely on parallel markets. In cities like Erbil, Sulaymaniyah, and Dohuk, these parallel market rates are often 10 to 30 IQD higher per dollar than Baghdad's official rate. For traders operating on thin margins, even small increases significantly affect operational costs. Regional trade dynamics exacerbate the problem. Northern Iraq depends heavily on imports from Turkey and Iran. Shipping, customs, and foreign exchange all contribute to rising costs when dollar access is constrained. Traders report delays in receiving shipments and rising prices from suppliers, forcing them to either raise retail prices or reduce inventory, which in turn affects consumers. Black market activity is another critical factor. While the Central Bank of Iraq monitors and regulates unofficial trading, black market rates respond faster to supply-demand fluctuations. Traders who cannot access official dollars often turn to these informal channels, paying premiums that reflect the immediate scarcity rather than official policy. This has created pockets of localized inflation, particularly in cities outside Baghdad. Historical patterns show that such fluctuations are recurring. Post-2003 currency reforms introduced a stable official dinar, but regional variations persist due to banking infrastructure disparities, political autonomy in the Kurdish region, and cross-border trade demands. During past periods of increased dollar demand, small traders in northern Iraq have consistently faced temporary shortages and cost increases. Economists emphasize that these pressures are market-driven rather than indicative of a central bank revaluation. The CBI continues to maintain overall currency stability through measures such as reducing cash circulation, promoting digital payments, and monitoring currency flows to prevent hoarding or smuggling. Parallel market pressures reflect short-term supply-demand imbalances rather than official policy shifts. For small traders, practical steps are crucial. Careful monitoring of daily exchange rates, maintaining flexible pricing strategies, and diversifying suppliers can help mitigate the impact of rising dollar costs. In addition, traders are advised to engage with regional networks and explore alternative payment channels to secure currency at more favorable rates. For consumers, the message is clear. Localized price increases or temporary shortages may occur, particularly in northern cities reliant on imports. Awareness of these trends can help households plan their budgets and avoid panic buying. Looking ahead, experts predict that if the parallel market continues to tighten and dollar scarcity persists, small traders may experience short-term inventory reductions, and some retail sectors could see noticeable price spikes. However, as official allocations normalize and digital banking adoption expands, these pressures are likely to ease over time. Ladies and gentlemen, the rising cost of the US dollar is creating real challenges for small traders across Iraq, particularly in northern regions. While the official dinar remains stable, regional pressures, black market dynamics, and limited bank allocations are making dollars more expensive, with potential consequences for both traders and consumers. Awareness, adaptability, and careful planning are essential to navigate these fluctuations effectively.